morning, guys. Hope you're doing well. We've got FOMC today, so we're going to have to talk quite a bit about caveats and disclaimers and things like that today because of the huge risk event that we're going to be seeing. And things are looking risk off currently. The SSI is getting quite heavy. There's now 5 people, or nearly 6 people say, they're buying risk indices versus the one person selling. Now, these guys should be counter trend and these guys should be wrong. Now, if they're buying, price should be coming down because these guys are long, right? So we need to see a flush of these guys, and it's very unusual for them to be long. And so we're sort of entering like unprecedented territory. I think we'll go maybe 8, and then I think that might be the highest we've ever seen it. And we've been recording this calculation for 3 years now, and we've never really gone higher than 8. So I think we need to see a flush, and so today's will be a catalyst for the flush. I think we're going to see a big massive move at the interest rate decision, and then we're going to have the Powell speech. So yeah, I think we're going to have to be risk off today because of this. We've got the VIX, it's high above its yearly pivot, and the yields are pumping a lot as well. Admittedly, the 12-month yield did come down, but they are still very, very high. The dollar, the Swiss are, the strong buy, but then again, the Aussie's there as well. So that's being quite naughty. The Aussie doesn't belong here if we're going to be risk off. So they might get paid in our Aussie. So it's quite skewed. Nearly 6 people buying indices versus the one person selling. So they're very high, and the long dated yields rose. That's probably going to be okay as long as the short dated yields don't rise. The long dated probably can, but these can't. Then that'd be really risk off. So I'll completely out of bonk. Yeah, we've been doing this for a while now, and this is just got a very strong curvature now. And I think the only way that we're going to get this down is from geopolitical issues getting resolved. Putin was supposed to make a speech last night, and then that got cancelled. So I wonder whether or not he's been advised to maybe rethink his plans, because the rumour was that the Turkish president said that he was thinking about withdrawing. Now, if Russia and Ukraine do have a truce and a ceasefire, and then this is going to be less geopolitical worry, and then the yields might come down. And we've also got China and Taiwan as well. That's probably going to be the next thing. But these are pumping up because of the risk, and there's a lot of uncertainty out there as well. And I don't know if COVID's going to come round again. If it does, these will probably spike higher as well. See, they've gone long on DAX, they've gone long on the S&P and UK 100 and oil. They've also gone quite long on France 40 and pound yen. Look at pound yen, it's fallen quite heavily now. Euro yen, they've gone long. And so yeah, we have to remember, we try and get the colours to match. Euro yen isn't matching, but it will probably eventually will match because the way that it's moving across time. So they were -7, -4 last week, -3 this week, next week -1, next week there will be a sell, and then that'll be probably going in free fall. Dollar mega strong, mega strong. So like I was saying last week, I think it was, do we want to fight it? They did make some attempts to combat the USD strength, but I think there's too much going on right now in the world that's bolstering the USD as a safe haven. The euro and the yen did try and fight back, but they got repelled, and we're back to where we were, and very heavy, very strong technicals on the USD. This will require risk off, and also the massive caveat today is that don't feel like you need to take the trade of the day because we've got FOMC. I probably shouldn't have published it because of today's risk event. I think for CPI we won't, definitely, but for FOMC we could potentially do it. Well, we've done it now, but just be very careful. I think CPI will just not have the trade of the day. So we'll need risk off for this. Okay, so if you don't know what risk on is or risk off, it's if you go into indices, if we can see, so we're quite risk off because we're negative. Okay, so we'd want that for our current setup. and if they go green, then it won't be good for our setup. So that's should be quite simple. Oops, where are we? Back here. So we need risk off, right? So you have to understand how that the risk appetite impacts your currencies. So there's just like some options if you want to subscribe. There's the Patreon link, Quasidb. There's Discord, and this is how we stand right now. So there's the 21 moving average pointing down. It's going to be a decent resistance, I think. And down we come. So the reason for this to come down, well, we got the fundamental things, and we got QT, and also the guys, the retail guys are long, and they just sort of went long at the wrong time. You know, when the Fed were withdrawing stimulus, the retail herd bought. You know, they were, instead of selling like sensible people, they bought. While you know, the Federal Reserve were withdrawing that stimulus. So so sentimentally sell, and probably technical sell as well. You know, we're using this 21 moving average just as a gauge, you know, to see which direction we're going. You can see how well supported it's been. And, you know, we peaked, and interestingly enough, this is where the Fed sold their shares in their stocks, right at the top. So S&P. So this is interesting. So this would be a fake candle normally because they shorted it, and they shorted it here, and yet they're getting paid. So I think we might be seeing stuff that's overriding sentiment, and the fundamentals are kicking in. So this would be a fake candle. I'll do a quick 2-minute video for the private feed afterwards, and now this should be a fake candle as well, but we'll wait and see. We'll have to wait and see what happens with the SSI. The SSI is Speculative Sentiment Index, so it tells us the retail long versus short, and it's very, very, very powerful. And you should get a copy of the sentiment indicators in any form. It's very, very, very powerful. So German 30. So we had a break, so caught those guys out. These guys stopped out. Right, and then it, you know, rug pull, and then we're back below there again. Now, what do? Do you exit, or you know what happens? And they went long here, thinking, oh, well, this was a fake. It wasn't probably a fake. It wasn't just like a trap, just to bounce from. It was just a horrible liquidity hunt, and down we come. And so, horrible trap, and then we got a trap. And then we've got a potential risky buy, but I'll send to the guys in Discord, just be very, very careful. I wouldn't even touch this right now, unless you maybe we resume above that, maybe, and then you could have that as your stop loss, night tight stop. But yeah, it's very, very risky. That is, it looks horrible. Now gold, they shorted it, so it's made it a risky buy. We've got some very strong H4 demand below, and it's tested it multiple times. It's shaking me out a little bit, and I'm now flat. I did make a bit of profit. It could have been a lot better, but I was in a sort of you know, in a disarray with the sentiment and technical. Technicals were quite good, but the sentiment sort of put me off a little bit. So I think it was a technical play with that demand area. If that breaks, then you know we'll probably go into freefall mode, and this is possibly, well, it will move a lot for Powell. And the interest rate decision. Yeah, it's obviously moving with yields as well, and the yields are spiking as well. So there's some match, not necessarily a lot of mismatch. There's quite a lot of match. AU would be sell, EA would be, there's a mismatch there, but EU would be a sell, GU and U. EJ, GJ would be buy, and dollar CAD would be buy. It looks like they're getting a bit screwed, EJ and GJ. I just looked at the technicals, and it went really heavy. So I think it's a stop hunt. I think those stop loss clusters AU, and there's the location there. It's slightly lower than it was yesterday. So that's something to bear in mind. They are bringing their stops lower because they're thinking that they're going to get probed, and they probably will at their, you know, their FOMC. This would be normal. This was done for about 45 minutes ago, so 53%, 59%. Okay, so we have still low, still too low really. Aussie is paying the retail guys quite a bit. So yeah, so that's wrong. So Aussie is being naughty. So yeah, I probably would wait for that to get higher personally, and probably wait for about 70%. Because right now, if you're going to be using sentiment for your, your bias, you're looking at about 50%, which is like a roulette table, a casino. So wait for that to get a bit higher, and then you know the trap's been placed. AN was our trade of the day, and it was the trade of the day prior, and we did very well again. So very happy, and yeah. So there's some nice feedback on the little reactions there, and up we went. So there's Aussie, and then there's Kiwi. It's a bit blurry, but that's the logic there. You see, and that's how that works. The extremes again, so it's quite frustrating. Dollar Swiss is neutral, so that's of note. An economic calendar. This obviously all eyes on this, and I don't envy being Powell right now. He's got the whole world on his shoulders. That's trillions of dollars at stake. And so it must be quite a lot of pressure. And we've got the BOJ, and we've got the BOE, and then we've got some high severity data in the US as well. So especially true today, and maybe even just sit out, watch how things develop, and you can see the stops getting taken, and then you can see how it works. Today's pretty much going to be a stop hunt, I think, and I think gold is going to go from stop loss cluster to stop loss cluster today, but we'll wait and see. I'm going to do a quick 2-minute video now, and I wish you a good day, and remember to trade safely and to know your exit as well. It's very, very important, and you definitely don't want to have large losses. And if you know your exit, you'll never have a large loss. So that's something to consider. Have a great day, and I'll speak to you soon.